Well, here's another company that's affected by the wider world, Airbnb. We're watching that stock as well this morning, which has been tumbling. Right now it's down about 5%, actually, not down as much as it was earlier, beating on the top and bottom lines in the third quarter, but then giving a disappointing outlook for bookings in the fourth quarter. And as it's facing some macroeconomic headwinds and also just sort of, again, this readjustment, normalization process post-pandemic. What does the travel landscape look like post-pandemic? Are people going to be going for long stays, working remotely in other places? I think individuals are trying to figure that out. I think Airbnb is trying to figure that out. We saw a shift back towards some more urban bookings during the third quarter, which indicates maybe a roll-off of people going and staying out in the country somewhere and working remotely. And so, I think investors are also trying to wrap their heads around that shift back towards what does normal even mean anymore,
Sure.
but a shift back to that environment.
Yeah, and that's going to have an impact on the average daily rate. You figure a lot of the more urban listings that they do have, it typically comes in at a lower rate. And so that average daily rate was about $156 in this most recent quarter. That was up by about 5% year over year. And then you think about the stays as well, as you were mentioning, Julie, the long-term stays, 28 days or more, that accounted for about 20% of the nights booked. And so all in, when you have the return of urban stays and cross-border travel combined with even the average daily rate improvement, the active listings growing as well, the quarter itself wasn't bad. I mean, this was their most profitable quarter in the company history. It's really just the guidance going forward from here. They're talking about a choppy return on that cross-border travel as well. And then additionally, there are going to be some high marketing costs to really get more hosts on the platform too.
Right. And, I think all this was captured in a really good note this morning by Lee Horowitz over at Deutsche Bank, saying next year, the core metrics of the Airbnb's business can prove, quote, highly volatile. So you take some of the maybe recessionary concerns. You have the fact that Airbnb is going to be cycling tough comparisons. What does that mean in plain English? Some of the growth rates are likely to slow, not good when you have a stock value like Airbnb is, a premium to the broader market, and you don't have a good setup for the stock.
Yeah, and if a lot of their gains were coming from price increases and that 5% average rate increase that you were talking about, how much will that moderate, right? If inflation starts to moderate, will there be some pushback against those higher rates? But this is a pretty variable environment in terms of rates, right, for Airbnb. And so we'll see if they can maintain those kinds of gains.
There is some historical data to look back to with Airbnb because this is a company that had to operate through the Great Recession. When Airbnb started back then, they had a lot of people that were coming on the platform to host to get that extra income. It's just a matter of how much for Airbnb, given the scale up that they've had since that time as well, where they're able to kind of maintain some of these key metrics that investors are now really parsing through and looking through to really understand the strength and the health of the business.
What you're saying is, if we get into a recession, I rent my place out and live out of my car, basically.
And
That's
it doesn't even have to be the whole place. It could just be the couch.
Just be the couch. Okay, I can do that. That's great.
Yeah.
$500.
Next time you do your hit from home, we'll just see somebody in a back walking behind you to get something out of the fridge. Looking forward to that.
Frightening.
Looking forward to that.
All right, guys, Sozzi Sweets. They're going to list them.
Yeah.
Guys.